Hey future millionaires! If you're 25 and haven't started investing yet, this video will literally change your financial life. I'm Liam, welcome to Mindset Millionaire, and today I'm going to show you exactly how to build your first investment portfolio that could make you over $600,000 by age 55. You know what? Most people wait until they're 35 to 40 to start investing. Huge mistake! At 25, you have something the wealthy would pay millions to get back: time. And time is your best ally to build wealth through compound interest. In this complete 10-minute video, we'll cover how to allocate your portfolio based on your age and risk profile the exact ETFs I recommend for beginners with ticker symbols the DCA strategy that lets you invest stress-free, the 7 beginner mistakes that cost thousands of dollars, and a concrete simulator that will shock you with your potential gains. Before we start, make sure to subscribe and hit the bell. 95% of people watching my videos aren't subscribed, yet my advice has helped thousands build their wealth. Come on, one quick click takes 2 seconds. Let's talk allocation. There's a golden rule in investing: 100 minus your age in stocks, the rest in bonds. You're 25? 75% stocks, 25% bonds. But wait, this rule dates back to when people lived shorter lives. Today, at 25, I recommend instead 80 to 90% stocks for growth, 10 to 20% bonds, cash for security. Why? Because you have 40 years until retirement. You can afford to take risks. Now, let's talk risk profiles. There are 3 types of investors. Conservative, you lose sleep if your portfolio drops 10%, 60% stocks, 40% bonds. Cash expected return, 5 to 6% per year. Moderate, you can handle losing 20% temporarily, 80% stocks, 20% bonds. Cash expected return, 6 to 7% per year. Aggressive roller coasters don't scare you. 90 to 100% stocks, 0 to 10% bonds expected return. 7 to 8% per year, but we don't stop there within your stocks. You need geographic diversification. 50% United States, the world's economic engine, 25%. International developed Europe, Japan, 15% emerging markets, China, India, Brazil. 10% specific sectors, tech, healthcare, energy. This allocation protects you from local crises. When the US struggles, international markets can compensate, and vice versa. Before I give you my favorite ETFs, quick reminder: an ETF is like a basket containing hundreds of stocks. Instead of buying Apple, Microsoft, Google separately, you buy one ETF that contains them all. It's instant diversification. Here's my beginner ETF selection. Tested and approved for the US VTI Vanguard Total Stock Market. Expense ratio 0.03%. SPYS and P500. Expense ratio 0.09%. Bug growth stocks. Expense ratio 0.04% for international VTIAX international stocks. Expense ratio 0.11%. VEA developed markets. Expense ratio 0.05% for emerging markets. VWO emerging markets. Expense ratio 0.10%. All-in-one ETF for the lazy VT Total World Stock. Expense ratio 0.08%. 60% US plus 40% international. One fund. Global diversification. Where to buy all this? My favorite brokers: Fidelity's zero commission ETFs, Charles Schwab excellent research tools. Vanguard, if you love their ETFs, avoid traditional banks and expensive advisors. Their fees will destroy your returns. DCA equals dollar cost averaging, the principle. Instead of investing $10,000 all at once, you invest $500 every month for 20 months. Why is this awesome? It smooths out market fluctuations. When prices are high, you buy fewer shares. When they're low, you buy more. Mathematically, it reduces your average purchase price. Concrete example: VTI costs $100 in January. You buy 5 shares with $500. In February, it drops to $80. You buy 6.25 shares. In March, it rises to $120. You buy for 0.17 shares. Result: you have 15 points for 2 shares for $1,500. Average price of $97.30 per share. Without DCA, if you had invested the $1,500 in January at $100, you'd only have 15 shares. Practically, here's what you do. Automate at $200 to $500 transfer monthly to your broker. Set up automatic ETF purchases every first of the month. Forget about it and live your life. That's it. No stress, no market timing, just consistency that pays off. The 7 expensive mistakes. Mistake 1, trying to time the market. I'll wait for it to drop before buying. Wrong. Timing the market beats timing the market. Mistake 2, panicking during crashes in 2020. Those who sold lost 30%. Those who held gained 50% the following year. Mistake 3, over-diversifying. Having 50 different ETFs isn't diversification, it's complication. 3 for ETFs are enough. Mistake 4, ignoring fees. 1% extra in fees equals 25% less return over 30 years. Mistake 5, investing money. You need golden rule. Keep 3 to 6 months of expenses aside before investing. Mistake 6, following TikTok advice. No. GameStop isn't an investment. Neither are meme coins. Mistake 7, not using tax advantages. 401k, Roth IRA. These accounts can save you thousands in taxes. How to avoid all this? Educate yourself. Books, serious YouTube channels. Start small. $100 month is already huge. Be patient. Wealth builds over decades, not weeks. Automate everything to avoid emotional decisions now. The moment you've been waiting for. Numbers that will motivate you. Simulation 1. You invest $300 a month for 30 years. Capital invested $108,000 with 7% annual return. Final capital $729,368. Profit $621,368. You transformed $108,000 into over $700,000. That's the magic of compound interest. Simulation to minus 30-year comparison at 7%. $100 month equals to $143,000. Final to $100 month equals for $186,000. Final $500 month equals $1,215,000. Final $1,000 month equals to million for $130,000. Final C. Every dollar counts, but starting early counts even more. Proof that starting early is crucial. Person starts at 25, invests $200 a month for 10 years, then stops. Total invested $24,000. Capital at 65. $525,000. Person B starts at 35, invests $200 a month for 30 years. Total invested $72,000. Capital at 65 for $186,000. Person invested 3 times less but ends up with more money. That's the power of starting young. Let's recap your action plan. This week, open an account with an online broker. This month, start with $100 to $200 in a world ETF next 6 months. Automate your monthly investments next 30 years. Let the magic happen. If this video helped you, like, share, subscribe. Write in the comments how much you plan to invest monthly. It'll motivate the community. And remember, you're not late. You're ahead of 90% of people your age. Your future self will thank you. See you soon for another Mindset Millionaire video.